Hello friends, our first company for today is Divi's Lab. So Divi's Lab manufacture APIs. So APIs are active pharmaceutical ingredients basically used as a raw material by pharmaceutical companies. It's a market leader in the API business in India and one of the leading player in the world as well. One more positive point about Divi's Lab is that it's a debt-free company, which means that it has not taken any loan to expand or run its business, which means it does not have to pay any interest. And you can see that the company has delivered good profit growth of around 22% CAGR in the last 5 years. Here you can see the company is currently down by around 35%. So it's a good opportunity right now, which is available in a market leader. You're getting a market leader at a 35% discount. So here is the return profile for Divi's Lab, and you'll see it has been a consistent compounder. The return on equity has been consistent. The profit compounding also has been very good, and the sales also has been in double figures. And the CAGR also, if you'll see, the 10-year CAGRs have reduced now, but it was around 25% earlier. And for 3 years and 5 years also, it is around the same range. In last 1 year or so, we are seeing some challenges with the company. Reason is because company deals majorly into exports, and it exports most of its items in America and Europe, and there's a slowdown there, and that's why we are seeing a dip in the profit and the results as well. But in future or in long term, I see this company will bounce back. So it will benefit the most once the API business, which is currently being dominated by China, start coming to India. Then this company is the one which is going to benefit the most out of that change. So I am confident about this company, but you can also take your own call and do your own research. Now let's look at the chart. Now here we are at the chart of Divi's Lab, and you'll see that currently it is taking support at around 3300 levels. So this is a good entry point if somebody wanted to invest in this company and does not even have a single share. This is a very good level to invest because the company is available at 35% discount. After this, if it goes further down, then the next level will be around 3000 level. So it goes to that level, then you can think of accumulating more of this stock. Our next company is Alkyl Amine, and this company is a leading manufacturer of alphatic amines in India. So it holds around 50% of the market share in alphatic amines, and this alphatic amines is used in various industries like pharmaceutical, agrochemical, paint and coating, textile and auxiliary industry. And it has its global presence in countries like Mexico, USA, UAE, China, Thailand, etc. And few positive about this company is that this is also a debt-free company, and it has delivered a good profit CAGR of around 34% in last 5 years, and the return on equity is also very good. So here you can see that this company Alkyl Amine is currently available at a discount of 26%, which is again a very good discount. This has been compounding at very good rate. Similarly, the profit that we have already seen and return on equity is also very good. And CAGR for last 10 years have been around 59 and 5 years has been 65. Now we are at the chart for Alkyl Amine, and you'll see that the stock has been falling from its top, and it made a low at around 2500, and from there it has recovered. Now it's taking support at around 2800 level, which is its current support. So here you can see that in the last 1 year, it has not given any return. It has been down by around 13%. But if you will see the return for 5 years, it has given a very good return of around 1100, which is massive return in 5 years. So the company is taking a pause here, but it does not mean that the company will not perform going forward. This is just a temporary situation. Once it starts moving again, then we can again see good increase in the share price. Next company is Astral Poly. It's into the business of manufacturing plumbing related items like pipes and drainage systems, and recently it has forayed into adhesive and paint segment also. And this company has recently done acquisitions as well. So you'll see that company acquired 100% stake in Rex Poly Extrusion Private Limited in a cash deal for 150 crores. And here you will see that it has expanded into the faucet and sanitary ware business and paint business as well. And Astral has continuously invested in brand promotion activities, and you must have seen that Astral has also onboarded Ranveer Singh as a brand ambassador for Astral Pipe. This company is also a leader in pipe segment, and this is a debt-free company, again giving a good profit CAGR of around 27%. And you can see it is currently available at a discount of around 28.6% from its top, which is a good discount in a market leader company. And in the last few years, the company has given good CAGR profit. You can see in last 10 years, it's 46, 532, 3 years 33. So it's been consistent. Only in the last 1 year, we are seeing this dip, and this we should utilize as an opportunity for us to invest in these market leaders. Now we are at the chart for Astral, and you have seen that this is already available at around 28% discount. Right now the company is available at around 1800 to 1900 level, and its next immediate support is around this level, which is around 1800. So if we get this stock at this level, then it will be a good entry and accumulation point, and if it falls further down, then again it becomes more attractive. Our next company is Home First Finance, and the speciality of this company is that it sanctions home loan within 48 hours with a hassle-free process. And here you can see that it is focused on first-time home buyers in low and middle income groups. It primarily offers housing loans for purchase or construction of homes, which comprises of 92% of its loan. And here you can see why it is able to sanction loan within 48 hours. because this is a tech driven company and the company leverages tech a lot in its business process. And this company right now is the fastest growing company in the home finance sector, and right now it has a market cap of around 6,000. So it's a small cap company with high potential and which is growing very rapidly. You'll see here that the company has delivered good profit CAGR of 84%, which is massive CAGR over the last 5 years. So it shows how rapidly this company is growing in this sector. And here you can see that the company is currently available at a 29% discount from its top. Now let's look at the chart. So company, you will see that this company recently took a support of around 650 level, and from there it bounced back and it is currently taking a support at around 700 level. So this has been its current support, you can see, and this is where the company share price is hovering right now. So this is also a good level. You are getting this company at a discount of around 30% right now, which is still a very good discount. In case we get this company at a 650 level again, then again it will be a good entry point and accumulation point. If you like this company, you can definitely think about adding more shares. But one thing to remember is that this is a small company, so we should always invest small amount of our portfolio in these kind of company. Our next company is CAMS, Computer Age Management Services Limited. So this company is a mutual fund transfer agency and it provides investor services, distributor services and asset management company services. Basically it provides services to the mutual fund industry financial institution, and it is India's largest registrar and transfer agent for mutual fund, representing 22 trillion with a 69.4% mutual fund aggregate market share. So this company, you can see, has delivered a good profit CAGR of around 21% and good return on equity with around 45%. And this company, you can see, is currently available at a discount of 27.5%, which is a very good discount. You can see the OPM of the company is very good because it's an asset-light business model. Their cost is not that much, because of which you'll see that the operating margin is in 40s figure. So the business model of this company is very good, but the only problem with this type of company is we can say that these are also cyclical. So whenever you'll see that the Nifty is going up and Sensex is going up, you will see that more retail investors will start getting more interested into stock market, and they'll start investing in mutual funds, and that is when you'll see that more mutual funds will start coming with more funds and more schemes, and that is when we'll see an increase in the inflow in the mutual fund sector as well. But since you have noticed that in the last 1 year the market has mostly been flat, and the retail investors and the number of demat account which was getting opened is now gradually going down, and that's why you see the impact of this in the share price of the company, and you see them it is going down. But if your horizon is 5 to 10 years, you can think about this company, because this is again a temporary problem of 1 or 2 years when everything will be okay and inflation problem and everything will go down. When the share market starts going up again, you will again start seeing more demat account getting opened and mutual fund coming with more schemes, and that is again when the business also will start growing and the price will start moving in the positive direction once again, which is going to happen any which ways in the longer run. So now we are at the chart for CAMS, and you can see currently it is hovering around 2270, and its next support is around 2200 level. So if you like the business of the company and your horizon is 5 to 10 years, you can use this opportunity to add some shares of the stock. But do your own research, and do remember that it may take a lot of time for the stocks to recover unless we see an upside in Nifty and Sensex and we see that the retail investor coming back to the market. You may not see that much of an increase in these kind of stock. But in the long term, definitely these businesses going to do well, because the penetration in Indian market is still very less. We still do not have that much of demat accounts, or we still do not invest that much as a nation in stock market or in mutual funds. So there is still a lot of potential there, a lot of ground to be covered, and these are the companies which will benefit in the longer run. Next stock is CDSL, and you'll see same is the situation with CDSL as well, because this also is a company whose business is dependent on stock market. So when you'll see an increase in demat account getting opened, then you'll see an increase in the share price of CDSL. So it's totally dependent on the stock market business. So you'll see that it made a low of around 1050, and from there it has recovered and it is now taking a support at around 1200 levels. Same is the case with CDSL as well. If you like this company, if you like the business model of this company, you'll have to take a long-term horizon of 5 to 10 years, because in 5 to 10 years definitely there is going to be more inflow. The percentage of people who are currently invested in stock market is definitely going to increase in the coming future, and these kind of business will definitely benefit from that increase. So that's it in this video. We'll meet in some other video with some other information. Thank you.